Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
I'm going to give you some suggestions here for any of these strategies. Plan your trades if you're going to. Look for weekly and daily support. You really want to find high time frame support. You can even go to monthly charts. We're going to look at a monthly chart here in a minute, and you'll see what I mean. So plan your trades on weekly and daily charts using monthly, weekly, and daily support and resistance levels. So in other words, look for areas on these high time frame charts where prices rallied in the past as your potential trading range bottoms. Have a money management rule that says if you buy a position, of course, if you're buying a call, time is working against you, and you lose more than up to 50% of your capital, that's a time to close the trade just to preserve your capital. Okay? If you're writing strategies, and we'll talk about those, then of course time is working for you. But if you're buying any kind of option, make sure that if the trade doesn't start to work out in your favor after a certain period of time, close the trade and just look for another opportunity. And this is probably one of the best tools I can suggest because, Steve, I don't know if you've mentioned it to the people, but you have a brand new website, which Alana just sent me a link for, and I actually got a chance to look over, and I was really, really impressed. The ISC, of course, on both of their websites now, they have a lot of option strategies, webinars, talking about nothing but credit spreads, talking about trading volatility, talking about trading range-bound markets like I'm doing, talking about trading trending markets. Really, really good webinars with former market makers, other people that have done this before in the past, talking about how to trade these markets. And if you can combine this with what you're learning today, with what I'm teaching you here today, to actually plan your strategies, then again, you can figure out which one of the strategies you need to implement, and you can go right to that webinar and watch it until you understand it. So continue to educate yourself for sure, and this is a great tool for you. Okay. Now this is the U.S. dollars futures contract, and I changed it to a monthly chart. And the reason I changed it to a monthly chart is I want you to notice here multiple monthly tests of the resistance area near 90. So the weekly chart, it's pretty clear that we hit this 90 resistance area between 90 and about 95. But on this monthly chart, you could see it very, very clear. You could see how back in 06, we actually had a big sell-off from this particular area here between 90 and 95. We actually collapsed. And then, of course, last year from July and August, when we broke out, we had this great big rally that went right up to this 90-95 area, and then the sellers came back into the market. So this would represent the area on this chart where there's a huge imbalance of sell orders to buy orders that needs to be absorbed before prices can move higher and make new highs. And this represents an area where there's a huge order of buy orders that needs to be absorbed before the dollar index can actually make new lows. So in other words, this is what we look for. This is the very important part of our strategy. First, we find the origin of these big moves, up and down, and then we go to the origin of those moves, and we very, very methodically wrap a couple of lines around this area, and if and when price visits the area, we now buy. And of course, what we're really doing is we're buying from the novices of novice trader. We like to say that the novices of novice trader is somebody that likes to sell after a big drop in price and sell right into an area where objectively we can determine that last time prices traded here, there were many more buyers than sellers. This again was a couple of trading rules that really I had to learn because I was always the guy buying up here before I learned these rules. So by working again with Sam Seiden, he's the director of online education at the Trading Academy, working with him personally many years ago, he taught me that the novice trader makes the same two mistakes. He says they buy after a big move up in price, and they buy right into a level where the last time prices traded here, there were many more willing sellers than buyers. Supply greatly exceeded demand. And so we just want to take the other side of that trade. We want to be the seller to somebody who buys after the big two move up in price into supply. And so those are the novice mistakes that traders make. Now, believe me, many times, depending on the time frame chart you're trading on, the market will go higher. It will go through one of these levels. But mechanically, again, we just use the highest high of the cycle here, and we just put our stop loss behind here. And if we're wrong, we take our loss. If this is your risk here, folks, and this is important, if this is your risk and this is your reward, then your risk to reward is always going to be a lot higher. Okay? And that's what makes trading work. So this is a larger chart so that we can see here. I just wanted to show you that resistance area, which you cannot see on this chart anymore. But next thing I want you to notice is the size of the monthly ranges as price probed the 90 resistance area. See how price rallied up here? The next week, we actually the next month, these are monthly candles now. The next month, we actually had a smaller candle here, a smaller range, a lot lower volatility. And notice I put a Fibonacci retracement line on here. We actually probed the 38 Fibonacci, and we found some buyers. And then we kind of bounced back up into this resistance area again. And then the next month, we absolutely collapsed from here. So there definitely were some sellers up here. Okay? And the next month after that, we actually rallied. We rallied again another month later. This would probably be the March candle. I'm pretty sure this lines up right here with the March candle. We rallied right up into this resistance area again. Still too many sellers, not enough buyers, and prices dropped. And fundamentally, this is when the Federal Reserve made the big announcement that they were going to, do whatever they had to do to keep the economy humming along to try to restart the economy, which we call quantitative easing. So fundamentally, right there, something changed. But as a trader, we know even before any of these fundamental things happen, we know where the origin of these imbalances are, and we can plan our trades. And remember, trading is all about probabilities, not certainties. This trade could lose. This candle could go through and stop you out. It'll happen. But if you're using ISE FX options or some other kind of instrument where you don't have to worry about that kind of stop loss, you just improved your odds that you could stay with this trade a little longer. So we may, again, have monthly tests of this support level going forward here in the future before we absorb all the buy orders in this demand or supply, demand level or support. And if we do, we'll go sideways and then we'll go lower and the dollar will make new lows. And then we'll know for sure that the Federal Reserve is continuing with quantitative easing. All right, so that's our dollar index. Those are the percentages. Okay, so now we know what the percentages are on here. And we know that the euro makes up the biggest piece. So notice how our euro, dollar versus the euro, it resembles, the cash index. So notice we're not quite down to that support level on the monthly chart, which means that maybe next month or the month after or even this month, we may even extend the month lower till we reach the support level on this index. So just something to keep an eye on going forward, because the picture, again, from the futures contract to this index, the cash index, is a slightly bit different. But this is how I plan my trades.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.